I run a LinkedIn strategy where I'll post some type of educational content 3 times a week and then sometimes more. And the engagement from those posts really funnels potential investor leads into my email marketing software where I can then nurture them, educate them on what I do, and then eventually pitch them deals.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. We are back with our guest, Elijah Brown. Yeah, I hope you'll listen to yesterday's episode where we highlighted his experience, his track record, things about him, where he brings this level of experience of underwriting deals that most people will probably never have from previous corporate position. But then how he used that in a fund model and raising money. Yesterday, why fund to fund? Maybe the approach for you as a passive investor or as somebody getting started or raising money, partnering on deals. You're going to be educated yesterday about that model and even why LifeBridge is using that model to some extent as well. But then actually in today's show, you're going to hear how he's been so successful raising money. And he's going to lay out, I appreciate his transparency because he's going to lay out some tips that you can put in place today to raise more money for your deals. Whether you are a passive investor or whether you're looking to be active, you need to understand what fund to fund means, right? And why that may be a good option for you. Our guest, Elijah Brown, he talked about that yesterday and why he has gone that route. Some things that you need to know, whether you're active or passive. You need to listen to yesterday's show and you're going to learn more about him there. Today, we're going to dive back into some skills that he has that, again, you need to have on your team or personally, one way or the other. But we're going to dive back in. Elijah, welcome back to the show.
Thanks so much for having me back, Whitney. I appreciate it.
Yeah, honored to spend some more time with you. I promised the listeners yesterday that we were going to talk a little bit about your type of business where you're on the road and able to be so efficient. And I was telling you, it's like, man, when you're made to do something like that, you go find ways to do things that typically you wouldn't, right? And we all think we're out of time. We don't have enough time until some of that time is taken away, or there's some things, right? You figure out a different way to do things. We're going to get to that. But before we do, I want to know I want to dive in on some of your techniques right now around raising capital. I get questions about this all the time,
Sure.
and especially in our current climate, right? Everybody I talk to, about raising money, even very, very large operators, man, it's harder right now to raise than it has been in a long time. And there's more money sitting on the sidelines, right? Or trillions of dollars. That's more than's ever been there, right? They're just sitting there waiting. And so, man, Elijah, let's jump into some of your techniques on raising capital right now. I know you mentioned
Sure.
yesterday you have some kind of email marketing system or whatnot, but let's dive into a few of those things.
Yeah, happy to definitely happy to go over that. And just so that everybody who's listening knows, right now I'm approaching about that 20 million mark in terms of equity that I have raised. And so I'm going to go over like how I got there in the beginning and then some of the strategies I'm using now in this completely different business strategy and market that I'm in. And so for the first 5.5 years, it was mostly friends, family, and coworkers, especially in those first few deals, those single families. I was approaching my best friend and my cousin and a few really close friends, just trying to like put a club together for buying properties. This little pool of friends, and it wasn't even really taking fees. I was just trying to get in on these deals, and I didn't have enough cash, and so I invited these other people in to invest alongside me, and that's kind of how I built my early track record. Once I got a job and started meeting coworkers and other people who were earning high amounts of money, I started approaching them. And so that's the natural progression. You go from like friends and family to coworkers and people that, you just know or have some type of interaction with. And so for the first 5.5 years, I really raised money from those people, close connections. And at some point in every capital raiser's career, you run out of money. You exhaust those networks, and so you have to go toward a retail or an institutional route. And when you don't have a huge track record, you got to start with the retail because very few institutions are going to come out and trust you with that much money right away. And so the best way to do that is by establishing some type of presence through thought leadership. That's going on podcasts like I'm doing right now, and also posting on social media. So I run a LinkedIn strategy where I'll post some type of educational content 3 times a week and then sometimes more, and the engagement from those posts really funnels potential investor leads into my email marketing software where I can then nurture them, educate them on what I do, and then eventually pitch them deals. And some of those deals I can send to everyone because they're allowed to be mass advertised. Those are the 506Cs. And then some deals I can only send to people that I have a relationship with via either a video call, a phone call, or some type of pre existing relationship. Those are the 506B deals. And so we run both types of strategies, but the whole goal is right now going after a specific avatar of retail investor, someone who earns enough to be able to invest $50,000 into a deal, and then essentially nurturing that relationship with those people to try to grow the list. And just in complete full transparency, I only have I have about 400 contacts in my email list right now. So that's where I'm
Okay.
at.
That's awesome. Well, having any kind of strategy is more than what most people do. And so, but I love the thought through a podcast, a LinkedIn strategy, even something as a cadence as 3 posts a week. Let's dive into a couple of those things
Sure.
there, and because I've heard and I have not taken advantage of this like I should have, and but LinkedIn. Right. I mean, I hear so many people talk about raising money on LinkedIn and Twitter and some different platforms, but it's almost like if you can just focus on one of those, like you can really go places, right? And so it sounds like your path was LinkedIn. You said 3 posts a week. Speak to maybe the creation process and break that down a little bit for somebody that says, "Oh, wait a minute, Elijah, like
Sure.
I can't come up with that much content. I don't have that much to say," because I hear that all the time too, right? I don't have 3 things I could post a week. How do you come up with that? And then just follow up every day, or do you every day or on LinkedIn? And that, what's that look like?
It's difficult if you don't have a story and some type of track record. Luckily, I was going into this whole LinkedIn thing having had a lot of deal experience, both good and bad, as well as a story to go with it in terms of me being a young guy building this portfolio right out of college. And so I actually, when I got started, I only started posting regularly at the beginning of this year in 2023, and I started with an approach of let's try all the different types of media that they offer. So, articles, I was writing long form articles, I was doing the short form posts, I was putting up videos, I was doing carousels, all different kinds. And then every 30 days, I keep track of all of my metrics in a spreadsheet. And so I'm very like granular about it, and I see which posts generated the most impressions and engagement and which posts didn't. Why did the ones that did, why did they work? What components of those posts did people relate with and want to actually see? And then for the ones that didn't, like, what should I stop doing? And so I have this long running list of like things that I should keep doing and things that I should not do. And it's funny because the conclusion of that was that I should stop doing articles, I should stop doing videos, I should stop doing carousels, and only do the regular posts with a few emojis with, like, 5 or 6 lines of text and a really good hook in the beginning. And then specifically the type of content that I try to focus on is specific dollar amounts that I've won or lost, and people really love it when I talk about money that I lost doing deals. It's like people wanna know, like, they feed off of the fear and the disparity or whatever it is. I lost $15,000 in due diligence fees from this deal. Here's how I overcame it, and people wanna know, like, how did I get around that roadblock to continue with my business? And, so that's super important. The other thing is case studies from deals that I've done. So, photos and explanations. How did I raise rents 1,000% at this apartment complex in Phoenix, Arizona? People wanna know because they're interested in doing it themselves, and so, really those categories, those 2, but then also talking of being a van life nomadic entrepreneur, people like that as well. So, I've kind of niched down and figured out what I can post to relate with people, the form of that media, and that is and now I schedule my posts a month in advance where I'll use a software to just, like, write all the posts and schedule it over and over and over again, and I'll spend 1 day a month doing my posts.
That's awesome right there. 1 day a month, doing
Yeah.
scheduling a month at a time. So smart. What software do you use for scheduling?
I use Publer, Publr. I've heard of a few others. I think there's one called Taplio maybe, and there's a whole bunch of them, but
Yeah.
this one seems to work for me. And that doesn't get me out of the responsibility of responding to comments and posting on other people's stuff because that's how you get your post distributed to more people. You got to have early engagement and then it gets sent out to thousands of people.
Yeah. No, that's very helpful. And yeah, that I love like breaking down the
Sure.
what's the word? It seems so complicated, right? Like you're first thinking about that or kind of some fear, right? Of stepping out there and making that happen. I love how you're analyzing it as well. Like you're looking at the metrics and tracking it to enough to say, okay, I just need to forget these other three things and just do this. Right. And you just really simplified.
I wrote an article. It was like a fictitious story of what would I do as an apartment investor during a zombie apocalypse. And I wrote a whole what if, and I was like so excited about it. I was like, this is so cool. People are gonna love reading about this. And it flopped. It got like 300 views, and I decided never again to do something random and off topic and to stop it with the articles.
Yeah, that's awesome.
Yeah,
Yeah. So one question there on the metrics,
sure.
is that something you're pulling from LinkedIn? Is that something you're physically having to go in and look and document it?
LinkedIn
How do
provides
you
it.
gather? LinkedIn provides it.
LinkedIn provides metrics. They show you what your top performing posts are on any look back period that you want. You can download your data into an Excel spreadsheet from LinkedIn as well. So that's important to do to track your metrics.
Yeah. No, I just love that. It's not extremely time consuming, right? And so, all right, and then so they come out of let's say LinkedIn, right? They connect with
Yeah.
you there. A lead does, potential investor, right? Then they come maybe what that you send them to your website or how what happens then? Or you message them, schedule a call.
I have a few different we call these calls to action within my posts. So at the end of every single post, I have a link to something. It's either to download my ebook, my free book, download my free underwriting model plus my video tutorial that goes along with it, or the one that I use the most, which I prefer the most is just like a link to sign up for my email list, which is essentially like, do you want access to see my deals? Do you want more real estate educational content? If so, just give me your email address. And they click the link, they get taken to a form, they just fill it out. It asks if they're an accredited investor, it asks a few other questions to just help me with my tagging and my databasing and everything like that. And then they get input into my active campaign email marketing software where they then get automatically sent educational emails, they get sent deals, they get sent requests to meet with us and stuff like that. Essentially, the whole point there is to nurture the relationship so that maybe they watch 3 or 4 deals go by and they see the emails coming through, and then one day they get an inheritance for $500,000 and they're like, I need to figure out how to invest this. And they see my email come through with a new deal and they're like, oh my God, this is great. I've been watching this guy for years. I know exactly what he does and his track record, the types of renovation projects that he does. I'm going to invest. And so that's the whole point of that.
Yeah. No, that's awesome. I appreciate just the simplicity, but taking action, right? And you've done that and the call to action on every post and those things. So then they come into email marketing. Give us a few details there, how you created something like that and what that looks like. How you follow up with investors. I get questions about this all the time as well. How do you nurture them through an email campaign?
So as soon as they come in, they get a welcome email. And then I have almost a year-long educational campaign where people will get one email a week with some type of important tip or trick or something related to real estate, multifamily real estate that essentially gets them up to speed on what multifamily real estate investing is, how to do it, some of the projects that we've done. And so that's important. The other thing that they get added to is a no relationship list, and I'll explain that. With our 506B deals, we can only pitch deals to people we have a relationship with, and I would even argue that that's not even the important reason why we add people to that list. We genuinely want to form a relationship with our investors, with our leads, because if they trust us, they're more likely to invest in our deals, no matter if it's 506B or C. And so that campaign is essentially just a couple email with the whole purpose of getting them to schedule a introductory call with us. And so the email goes out and it says, "Hey, thanks for signing up for our educational emails. by the way, like, we'd love to meet you. We don't just want to have you on our list as just a ghost. We actually want to get to know you. And even if we can't meet in person for lunch, we'd love to have a Zoom session with you or something like that. And having that actual like face to face relationship means the world of difference when it comes to raising capital.
No doubt about it. For sure. It is a relationship business but because of some legal issues as well around 506B and C, which the listeners should be very familiar with. Yeah, you need to track that, right? You have to know who you've had a relationship with and not. But I love your focus on, hey, we want to have a relationship with those people, right? And so you may market to them differently, right? Because you want to get to know them, right? Versus people
Right.
who you do have maybe a consistent conversation with now in a relationship, right? So, no doubt, it's a long term play, right? It's a
Oh yeah.
and so it's building that relationship. And so, yeah, appreciate even the one email a week, educating. We do a lot of that stuff as well, and we also have separate lists for 506 or people who we have a relationship with, right? Versus because of that exact thing as well. So I think it's very smart. But before we have to go again, I wanted to jump in on the operating while business like this while traveling, right?
Sure.
And there's been a number of times in my business where I have pushed myself in ways that I didn't think I could. I wouldn't have thought in the past that I could do this thing, right? Or is somebody tries this and they tell me it's way too much work, and then we just start with 10 times that, right? And it's not because we're anything special, but it's just a mindset of, hey, it makes me think differently because I'm like putting myself in this boat over here of having to do 10x versus 1x, right? Makes me think differently. And I feel like that's kind of what you've done. Well, we just want to go travel. I'm not going to stop my business, but I'm sure it made you be more efficient and do things in a way that you probably wouldn't have thought of otherwise. So let's dive in there a little bit and help the audience with some ways you've been ultra efficient.
Sure, and so I think there's a couple different, like, levels of being pushed to be efficient. You have starting from 0 where it's like you have all the time in the world, you're sitting in an office all day long, to you're on vacation with your family and all you can do is send a few text messages a couple times a day. And so you kind of have to learn what to do. I'm somewhere in the middle where we're literally living in a van at different campsites or BLM land or people's driveways, and I don't always have time to work. There's a lot of planning involved with where are we gonna go next? Where are we gonna get water and fuel and clean things? And so whereas a normal person would have 40, 50, 60 hours a week, I probably only really have 20, maybe even 30 hours of quality work time that I can actually focus on my business. And so that's required doing a lot of strategizing to because I don't want to give up, the quality or the quantity of the work that I'm putting out. And so here's a few things that I've done. So specifically using Calendly for meeting scheduling has been really important, and I block off my calendar to only, like 3 hours a day for, like, 4 days a week where I'm available for meetings with potential investors. I have a few additional time slots for meeting with my team. I try to limit meetings to certain periods of time during the day so that I'm not just I'm trying to drive somewhere new and take calls and it's just dangerous. And so that's one thing. Use Calendly scheduling. The other big thing I've done is I've partnered and brought people onto my team. And so I've got my partner Dave, who he takes the bulk of the investor introductory calls. He's the head of our investor relations. And then we've also brought on a few additional personnel into our company to do investor relations as well, because they have unique relationships with high net worth individuals as well. And so we've kind of outsourced some of that. The other part is working with third parties and outsourcing and contractors and Upwork, doing as much as we can to outsource things that we're not like great at. For example, active campaign. There are a lot of different like tips and tricks and automations and complications with email marketing. And I recently did a few consulting sessions with a guy and paid him a bunch of money to kind of help us fast track that. Because if I was focusing my 1 or 2 hours a week that I have on that, it probably wouldn't get done and it wouldn't get done well. And so the fact that we can just pay contractors or third parties to help us kind of bridge some of those gaps has been a huge help. Yeah, that's the meat of it.
Yeah, no doubt. It sounds like being very purposeful with your time, right? Like, the times of the week that you're going to have appointments, right?
Right.
And it's ultra important because you're traveling at other times, probably, or moving. And we do a little bit of camping, and it's getting set up and getting to a next spot or whatever it may be. There's some time there. But what I thought about there too, you talked about the danger of obviously doing that while you're traveling, but also if you're trying to have an investor call or really a call with anybody and you're distracted like that, I think it's completely obvious, right? And
Yeah.
so it's hard to create that genuine relationship that you're wanting to while you're completely distracted. And so I just
The
think it's
internet goes out while you're in a Zoom call. It's hard. Yeah.
yeah,
It's
that
almost like it's happened a few times. I'm just like, well, lost that investor because
yeah,
now they think I'm like a fool. So
yeah.
yeah.
That
Um,
first impression
that's
matters,
right.
right?
Huge. Yeah.
It does matter. And so, but then it sounds like scaling your team, right? You brought on other people who can help take some investor calls. And you mentioned though, maybe you brought on some people who already had relationships with high net worth individuals. Is that
Yes.
right?
Yes.
So what does that partnership look like? How do you do that? I don't know. What does that look like? Cause that, yeah,
Yeah, so it's interesting. Within a fund of funds model, I can bring co-GPs into my fund of funds to help me essentially raise capital. And I've done that on all of the deals where perhaps Goldhawk Capital is not the only company that is raising for that specific fund of funds. Maybe we might have two or three different fund of fund managers joining together to raise money for one deal. And that way we can raise a lot more money and have more negotiating power with the sponsor.
yeah. And then you started using something like Upwork. I've used Upwork for years, many
Mhm.
years now, and for lots of different things. I find that I push people to, hey, go try it, right? Go find somebody that has a skill that you don't have. Like you said, like something like Active Campaign, there's CRMs like that that are so robust that you can't just go learn overnight. But man, you could hire somebody to just like
Yeah,
fast track you 6 months down the road by spending 3 hours with you. Uh,
absolutely.
that's incredible. Anybody else you've hired or any other skill sets that's helped you to say, look on Upwork or
ChatGPT.
mm,
So AI is huge. I think anyone who's starting a business, literally anyone, needs to understand and learn how to use AI, especially the ChatGPT. And because it's just crazy. I've had ChatGPT draft me like at least 10 legal documents by now. Not like syndication documents, but like others type of like side letter stuff. And I ask the thing questions. I ask it to help me write content. It's almost like having like 10 more employees, right? And if you know how to use it right.
yeah. Now, and how did you learn to use it?
I heard the buzz going around amongst all the millennials, and being that I am one of them, I got very curious and decided to spend half a day just playing around with it and learning about it. I, for those who know about TikTok, I spend a lot of time watching like AI TikTok videos, and so the algorithm knows to feed me that content, and I'll spend an hour a day just like learning about AI through my TikTok feed or something like that. So it's definitely an important tool for people to know. And most people would think, how do you apply that to like a real estate business? Well, there are a million ways to do it, especially if you're looking to raise capital or produce content or produce legal documents. And have any questions answered about the legal system or any questions answered in general. It's a great tool.
Yeah. Yeah. And no, I've done quite a bit of research myself on it. And just so anybody, I mean, you mentioned this earlier about some other things, but there's so much education on YouTube about AI.
Oh, yeah.
And there's a number of different AI platforms that are so helpful for what we do and for obviously content creation and all that stuff. So yeah, it's some scary stuff though, the more you learn about it. It's pretty crazy.
It's
But
so crazy. We could literally, like, take this video of you right now and clone you, and I could type a text, and it would create a video of you talking, and you could go send that to investors. It's insane.
yes, I am aware of that. It is crazy. The ums and ahs, you can go in and edit
Right.
the text and edit the video. It's mad. But I mean, it's scary too, right? It's like I heard somebody talking. Actually, I interviewed a lady, Vanessa. I can't remember her last name a while back about AI, and there's a big dilemma about what is truth, right? Because you can
Right.
see a video on social media of somebody saying something, and it could be AI created through AI, and not even be that person really at all. Anyway, that's a whole nother thought there, but I just want the listeners to like, man, it can be very helpful. Obviously, you have to think through some of those things. But if Few final questions, Elijah, as we get towards the end here. But what about how do you prepare for a downturn? You're looking at a deal. I love asking operators, other sponsors, and it does. You can relate that to the current markets where we're at if you want. But ultimately, when you're looking at a deal, how do you know that you're prepared for the worst to happen, and then maybe something else to happen too?
Yeah, it's a good question. I think right now we're putting a lot of scrutiny on that. Like, what are the sponsors that we're investing in? What are they doing to ensure that they can ride out any storm and come out the other side? I think the first thing is making sure that they're not overpaying for assets, so getting in on a good basis. Properties are already down 20 to 30% in some markets. We need to ensure that the sponsors are actually acquiring these assets at a great basis. The second part is the debt. We don't want our deals right now to be too over levered. Like, I'm comfortable with between 50 and 60% leverage right now, just because rates are pretty high. I want a really good cushion of cash flow. I want that debt service coverage ratio to be pretty high. I want the debt to be either fixed or have a cap on the float that will ensure that the cash flow won't be completely eroded and that the essentially the debt can be serviced. I want that loan to be long enough term so that we can get through it. I don't wanna see any 1 or 2 year bridge loans. If it's a bridge loan, I think, like, my minimum would be, like, a 3+1 for, like, a full 5-year term, because we don't know what's gonna happen in the next 6 months, and it could get ugly, and so we wanna make sure that the property is positioned to just cash flow for at least 5 years. Those are the big things. The other things that I really look for, I want my sponsors to have a good track record, a lot of full cycle exits. I want them to be independently wealthy, and what I mean by that is we've seen a lot of sponsors getting in trouble and coming to their investors with capital calls. I want to see my sponsor come and save the day before I have to save the day, whether that is writing a check, making a loan to the business, because, I want my sponsor to be worth a significant amount of money so that they can do that. I also don't want there to be an ability to capital call. So I don't want my sponsors to have to come to me and ask. Obviously, in like a dire situation, I would rather they come to me than give keys back to the bank. But I really don't want that. And that's actually one thing that Rise 48 has done really well. They are very public about the fact that they don't expect to do capital calls and that they will not be doing capital calls with their investors. And so that gives me and my investors a lot of comfort. So those are just a few of the things. Location is important. I want to be investing in places where I think will grow in the next 5 to 10 years, not get smaller. And so yeah, that's really what I'm looking for.
What's the biggest challenge in your business right now?
A lot of investors are still sitting on the sidelines. They're unsure about the market. Raising capital has been challenging in this environment. And so there is a lot more, I guess, education and patience and lowering of expectations right now. Back last year in the second half of 2022, I was able to raise $3 or $4 million, like, no problem. And now it's like I'm struggling to do that amount just because people are not as confident. They're waiting for a crash to happen in August when all these banking numbers come out and see what the Fed does if they want to raise another quarter or so. And we'll see. But I think there are a lot of investors who are not yet comfortable getting back in.
No doubt about it. You're not alone there, by the way. Everybody I have talked to, man, it's hard. Like we mentioned earlier, it's the hardest time
And
in
it's
a
the
long
best
time.
time to invest.
Yeah, that's always the dilemma, right? Yeah. What are some of the most important metrics that you track? Could be personally or professionally.
Okay, I'll do both. So, personally, I'm always looking at my cash on cash. So, like, how much equity do I have, like, invested in these deals, and what am I actually getting back? And a lot of times it differs from the projections, especially in this environment where a lot of sponsors are doing lower leverage refinances and not necessarily getting that cash out. That could even make the cash flow higher, or it could overall be lower than I expected because I thought I was getting 100% of my money back within 2 to 3 years from a refinance. Some deals just aren't cash flowing as much as we thought because the interest rates went up. So that's really important to me, especially having, like, a nomadic, lifestyle here where, like, passive income is very important. Like, I want to be at the point, I'm there, but I want to continue to be at the point where I can, if something happens, I don't need to go and get a job. Professionally, the types of metrics I'm looking at, definitely like keeping an eye on rates, keeping an eye on inflation, just the general macro economic factors that are pushing markets right now. But also, I'm looking at my within my company, my investor lead engagement, who's actually like opening emails and clicking links and submitting soft commitments, who's actually like investing in deals, who's engaging with my posts on social media. Those are all very important, professionally for my business to kind of gauge where I'm at.
For sure. What about any habits that you're disciplined about that have produced a high return for you?
Definitely being consistent about my posting. So for lead generation, posting on LinkedIn, I've been consistent for 6 months now, posting 3 or more times per week and engaging with those posts as well. Whenever I get comments, that has grown my email list significantly and has resulted in a lot more commitments.
What about how do you like to give back?
A few different ways. So I love educating and providing advice. I do that both through LinkedIn and privately. Any of your listeners are welcome to schedule a free call with me where we can go over your specific situation, and I can, with no sales pitches or anything. I'm happy to give you any type of advice that I can. And then we're just trying to see the world and experience different cultures and understand where the problems in society are, so that we can come up with solutions at some point when we're in a financial position to do so. Some long-term planning and also some short-term stuff as well.
Nice. Elijah, it's been a pleasure to meet you and have you on the show and to get to do 2 shows with you as
Yeah,
well and dive in on the fund to fund, right, model yesterday and even some cash flow modeling stuff and then more capital raising tactics, things that have helped you to be successful in this space and really just how you've broken that down to a model that, hey, somebody can follow right now just by listening to the show. I feel like it's the doing, right? It's the going out and making it happen. I feel like
that's right.
people listen to YouTube videos and hear podcasts all the time, but they rarely put feet to it, right? And take action. And that's what you've done in a big way. So congratulations to you, by the way, and your success. But again, tell the listeners how they can get in touch with you and learn more about you.
Thank you, Whitney. Yeah, so LinkedIn is the best way. Go and add me on LinkedIn, connect with me. You can see on my bio there are links to either schedule a call with me. You can download my free multifamily passive income ebook. You can download my free Excel model there. And then if you're curious about my company's strategy and some of the deals that we've done, you can check out our website at goldhawk.us, goldhawk.us.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.